let's take a look at gold right now. We're hitting new records again on gold. Investors are just looking for safety. Our next guest says that gold's a great place to hide out while the storm passes, so you can be ready to pounce on a generational buying opportunity. I want to bring in Key Advisors Group CEO Eddie Ghabour. And Eddie, we're going to get to that in a moment, but I do want to start with one of the reasons that investors are looking for that safety of gold. There's increasing concern about stagflation. Yet, San Francisco Fed's Mary Daly says she believes stagflation is an unlikely risk. And I'm wondering if you think the Fed, on purpose, is downplaying the stagflation threat.
I do think they're downplaying it because I think the market is telling us we are in a stagflationary environment right now. And the reason why I say that is we know markets are smart and they are leading indicators. You look at retail stocks, you look at housing stocks, cyclical stocks, it is clearly showing that this economy is slowing down. And I think it's slowing down at a faster pace than's priced in. And the battle with inflation is nowhere near the 2%. So I think these next few months, we are going to be trending in more and more stagflationary trade. And that is an economic environment that's a risk-off environment. And I think investors really need to make sure they're positioned for it.
You're predicting a low probability of a recession. In fact, you're saying we're going to get a V-shaped recovery. What kind of time frame do you mean here?
So I think I'm going to use Scott Bessen's term. We're going through a detox period right now, and they know that. You know, they're trying to get the 10-year yield down because there's $4 trillion of debt that he has to refinance in the next 3 months. So this slowdown, as painful as it is for some investors, is a necessary thing in order to get yields down. But I don't think we're going to have a recession. And when you have a market crash or stocks crashing in a non-recessionary environment, generally speaking, you will get a V-shaped recovery, and that's what we are expecting. And I would say our time frame would be sometime beginning of third quarter. Our biggest worry for the second quarter is as the earnings season. I think you're going to see a lot of firms bring revisions down and expectations down, and that's probably when you'll have the highest volatility and everyone's so scared about a recession, and then you'll make the contrarian move at that time and start really buying. So we're playing a lot of defense, but we're going to be very aggressively buying once we get that point.
Are you expecting a slew of pre-announcements for earnings? I mean, today, again, is the last day of the quarter. And you have to wonder if starting maybe tomorrow, you start to get these companies come out and say, warning. And I point back to what happened to Lululemon on Friday. You know, that stock sank 14% because they said the consumer is getting cautious. The consumer is likely got a problem right now, a spending problem, and they're not going to be coming into Lulu. And that was a pretty hard hit for that company.
It is, and there's many companies just like that. There are so many names, large cap names, that are down 30, 40% off of their highs. And I do expect to see these announcements come. And I'm afraid many people are not really positioned for it. I mean, look, the S&P, year to date's only down 5 or 6%. And we've already had all these names that are really taking a big hit. So if we get an oversold bounce here in the next couple of weeks, which I would expect on a short-term standpoint, I think it's prudent, if you're fully invested, to really start raising some cash, maybe buying some gold and playing some defense, because you can only take advantage of a generational buying opportunity if you've prepared yourself and not lose too much during the downdraft.
What about the Mag 7? Is there opportunity there? What about an NVIDIA in particular? I mean, we're looking at when you see NVIDIA at 105, you can't help but think to yourself, interesting.
I don't think there's any doubt in our mind that the Mag 7, there'll be plenty of opportunities there in the coming months. But I think NVIDIA is just like the rest of these names, where they're going to probably have to bring down guidance when they do their earnings for the first quarter, which will be reported here in the second quarter. Look, NVIDIA is one of our favorite names, but on March the 3rd, we really sold a lot of our portfolio and raised a lot of cash. We took NVIDIA from about an 8 to 9% position down to 2. I think that name is going to be under $100 a share. And when it is, we will start buying back. So even great companies will take big hits when you have a growth scare. And that's what we have right now.
Mark Tepper, one of our frequent guests in the morning, said he's backing up the truck if NVIDIA goes below $100. Backing up the truck. We'll see if investors do that.
I'll drive the truck for him.
I'll let him know. We'll see him tomorrow. Eddie, thank you very much. Really appreciate your time.